that Reserve Bank of India governor, they have held MPC before time and have announced these measures. And when we juxtapose them with the government measures, the entire effort of the government and Reserve Bank is around reviving the growth in the economy and at the same time recognizing the difficulties which industry and business have faced. And all these measures around moratorium, large exposure framework, the reduction in interest rates. So all these measures will be helpful in revival of the economy.
So specifically on the 3-month moratorium extension, could you tell us, largely what has been the response from borrowers so far when they know they have to pay this additional interest? Have they been coming forward? And now that RBI has allowed this additional interest to be converted into a term loan, how much of a relief would that be?
The response of the borrowers, it has differed from banks to banks. For some banks, which RBI had recommended, that is 90 days moratorium, let there be another moratorium of 90 days, because when this announcement around moratorium was made in March, at that time, nobody had expected that the lockdown will be extended for such a long period. So it is a policy response to the situation which has emerged. And if we look at the announcements by the Honorable Governor of Reserve Bank of India, it's all a very calibrated response to the situation which is emerging. And it also shows that this is the third announcement around many regulatory dispensations. So RBI Governor also mentioned that they are very alive to the situation. They are keeping a watch on all the economic activity, on all the sectors. And then a calibrated response is coming from the RBI to help the industry, businesses, banks. And the focus as of now for all, whether government, Reserve Bank of India, banks, it is that we quickly revive the economy, come back to the normal, and whatever steps are required, they are being announced. And if there is something more required in due course, they will also be announced.
So would you rather have had the one-time restructuring? Are you disappointed that was not announced and only a 3-month extension?
I think our tendency has become that whatever has been given, just take it and ignore it. And then start talking about what has not been done. Now, when there is a time till 31st August, it is the moratorium itself of 6 months starting from March. So that takes care of the, as I said, cash flow disruptions. When we talk about the restructuring or one-time restructuring, then it requires deeper analysis. The deeper restructuring is required where any enterprise, if they incurred losses, and then we have to work out a plan to fund those losses. Right now, any moratorium, it takes care of the situation around the cash flow disruptions. And if someone needs, after 31st August, a restructuring, then whatever is the policy response, or whatever, if there are any amendments to 7 June circular of Reserve Bank, or if there are no amendments, so banks will have to deal with that situation. But I would not be obsessed with one-time restructuring at this particular point of time, when we still have time up to 31st August, about how now, post lifting of lockdown in a phased manner, how does the various sectors of the economy respond, assess the need, and then if there is a need for one-time restructuring, we can still do it. Nobody prevents 7 June circular. But if there is any modification required in that, so I'm sure that, as I said, that RBI has been watching the situation and responding appropriately. So that can wait till 31st August. And if we want to do, there is no bar on doing the one-time restructuring even as of now. Then we go by 7 June circular. That's all.
Can we take the next question from Mayur, please? Mayur?
Yeah, can you hear me?
Yeah.
Yes.
Yes, sir. Sir, RBI has asked banks to regularize all the working capital limits by the end of the financial year. Wanted to know your thoughts on this because this seems like a very short time. Already 1 quarter has been lost and the capitalized interest has to be returned in the remaining months.
So this is up to 31st August. Whatever interest on the working capital that has now that will be recoverable in 6 installments starting from September. And what we have to also recognize that many people they are servicing their interest, and this is not a situation for everyone. And it is only that working capital component which would still need to be serviced starting from 1st September and can be paid in 6 installments.
Right, sir. And when
Sorry, Mayur.
Yes, sir. Coming back on the restructuring, when would you get an idea of the stress in the system, and when do you think would be a right time to look at restructuring?
There is no right time. All accounts, and which are larger accounts, say 1,500 crore and above, that is mandatory from Reserve Bank of India. But there is one change, and the ordinance or the law is still not come. That is around the IBC deferment, where for 1 year there is some deferment expected. And RBI 7 June circular says that within 6 months you do the restructuring. And if you do the restructuring, you don't have to go to IBC. And if you don't complete the restructuring within 6 months, then all the additional provisioning requirement kicks in. Look, I think there is no time frame. Even now, if any unit or a larger unit, and we know that they will not be able to service the debt in the long run, or the losses are such that restructuring has to be done, even it can be done today.
Can we take the next question from Nupur? Anand?
Yeah. Hi, sir. Sir, I also have another question on restructuring. Just wanted to understand that, what is the sense that you have right now, that you think that without a restructuring with the current measures that have been announced, can the NPA problem be tackled, or restructuring is absolutely necessary to handle the NPA recognition going ahead?
Again, I think, let me repeat, the moratorium takes care of the disruption of the cash flow during this lockdown period, and say lockdown now partial exit is happening, and hopefully within June we will have more relaxations. It takes care of temporary disruption. Then it will be sector to sector and unit to unit. And that is where the banks would need to sit down with each of the entities, have a look at their financials, the impact on that particular sector and particular industry. Even within a sector, the capability of an individual entity and promoter is different. Say, for example, in aviation, there are different owners of airports. So some may be relatively weaker and may request for, say, rescheduling of term loan installments even after 31st August. But there may be some owners who have some cash in their balance sheet and they may not like to do restructuring. So I think this would all depend upon the individual entity and a specific sector. And as I said, that there is already a framework, 7 June resolution framework. And what did it say? That you do the restructuring within 6 months and determine what is sustainable debt, what is unsustainable debt, and do the necessary classification and promotion. So if any amendment or any modifications are required, I think as the situation evolves, RBI would take cognizance of that and give the policy response.
Can we take the next question from Vishwanath, please?
Sir, hi. Just wanted to get some clarity with respect to NBFCs and HFCs. Now, in the first round, there was some form of confusion which took quite a bit of time to get resolved. In the second round, are you expecting the NBFCs and HFCs to receive the moratorium from banks immediately? Firstly, and secondly, are you seeking these NBFCs and HFCs to clear their previous rules before extending any further funding?
No, NBFCs, as we said, that our policies that we would look on a case-to-case basis. And again, I am repeating for your benefit and benefit of others, that NBFC, the requirement would depend upon their cash flow. So now, if they seek moratorium, obviously, to that extent, their cash outflow gets reduced. Then, of course, their collections, maybe whatever was the collection position in, say, April, May, are they NBFCs, and many of them, in fact, are seeing improvement in collection. So when it comes to NBFCs today, there are enough measures to support them. One is, as I said, that case-to-case basis moratorium. Then after that, whether any more funding is required and what purpose. The Government of India has come out with the partial credit guarantee scheme for their mature liability within the next 6 months. So considering the measures announced by RBI and the measures announced by the government, there is enough headroom and the enablers available to the lenders to support the NBFC sector. Everybody recognizes its importance, the multiplier effect which it has, and the policy measures announced so far, in my view, they take care of the NBFC sector.
Sir, just wanted to get some clarity. I mean, obviously, in the first round, because they had almost nearly completed their collections for the March quarter, it was expected that they would have the cash flows. But now it's already been 3 months. Now another 3 months is going to be added to this moratorium. People's businesses are not going to really turn around. So it is expected that their collections may then suffer now because of this lockdown as well as the macroeconomic impact. Would it be prudent for banks to offer NBFCs the moratorium just like they have offered it to the other borrowers openly, and then probably let them select if they want to opt out of it?
We would go case by case, because each and every entity we have to look at their cash budget and take a decision.
Can we have the next question from Saloni?
Yeah, hi, can you hear me?
Yes.
Yeah.
Yeah. So I just had a question on the banks. I mean, the banking system per se. I mean, your income has been impacted, but you have expenses, you're paying your depositors. So how are you, I mean, now again, this moratorium has been extended by another 3 months. Obviously, you are extending it to your borrowers. How are you then trying to balance this income versus expenses for banks? And I believe that a similar request had gone to the RBI where you could sort of stagger your expenses, if I'm not wrong. So how are you doing this? How are you balancing this?
No, this is very, so let me put it this way, a very funny question. If it is a loan, then till such time it is a performing asset, your interest income continues to accrue. The meter of the banks never stop. So on the loans, interest continues to accrue, and on deposits, also interest payable continues to accrue. It is all about that when do you recover. So for working capital, say for example, RBI has said that from say 1st March to 31st August, the interest will be accruing but not payable till 31st August. It becomes payable in 6 installments starting from 1st September. So the accounting in respect of performing loans is done on the accrual basis, and in respect of non-performing loans, it is done on the cash realization basis.
Okay, got it. Okay. One more question.
Saloni, please, we'll have Saloni,
let us take one question. Ritesh, let us ask. Okay. Yeah, Saloni, go ahead.
Just one clarity. Will the moratorium be extended for new customers? Like if I did not apply in the 3-month earlier window, can I apply now?
Yeah, sure.
Okay, thank you.
Can we have the next question from Tamanna?
Good morning, Mr. Kumar. Hope you're doing well.
Yes, yes.
Yeah, so two questions really. One is, what is the kind of impact you see on savings rate? We've already seen some cut in retail rates. Do you see that extending? And also, do you see the demand for extension of moratorium going up, considering now that the lockdown has been extended?
As far as the interest rate on deposits is concerned, so we will convene our ALCO. This is the process where we review what is the impact of the announcements made by the Reserve Bank of India, and accordingly we decide on the deposit rate. So that until such time our ALCO meeting is held, I can't comment on that. But obviously the interest rate scenario as of now is that interest rates are going down. So when they go down for borrowers, they go down for depositors. And what was your other question about the?
Do you see an increased demand for those who will want to take the moratorium option, considering that the lockdown now has been extended?
The lockdown has been extended, so maybe more people ask for it. But as I said earlier to some other question, that every bank, their profile of the customers is different. And there is a varying degree of percentage of borrowers who have opted for moratorium. In case of State Bank of India, that percentage is much lower as compared to other banks.
What was it, sir, in round one, if I may ask, for State Bank of India?
It was about, I think, around 20%.
Okay. Thank you.
Tamanna will take the next question. I will take the next question from Abhijit Lele.
Yeah, Abhijit.
Abhijit, can you hear us? Okay, if not Abhijit, Bijoy, can you hear us? You can take the next question.
Hi, sir, Bijoy here. So just again, going back to RBI on restructuring, do you think that banks can manage with the current level of provisioning? Because RBI has not spoken about the 5% additional provisioning that they had mandated for all the moratorium accounts. Do you think that RBI will, have you had any sense from the RBI when you had your conversation, whether they will expect you to make higher provisions or just 10% is what they will hold for these moratorium loans?
There is no change in that
Okay.
as per the announcement made today. So we have to continue whatever the regulatory requirement is.
Okay. And again, just to clarify, you said that restructuring is currently possible, but what you all had sought was downgrade relaxation and provisioning relaxation that automatically comes. That is still pending, right?
That is still pending, yeah. But as I said, that up to 31st August, in any case, there is a regulatory dispensation. And in this 3-month period, what as a bank I will do? I will review all my accounts. And wherever a borrower feels that after 31st August also, their losses are such that there is no other way but to restructure their loan, then we will take that call.
Thank you.
Can we take the next question from Ankur Mishra? Ankur, please go ahead. I think Ankur cannot. Abhijit, are you around? Ankur, can you hear us? I also have questions from others right now. I think Hamsini wants to ask a question. Hamsini, can you hear us? You can go ahead.
Yeah, thank you. Sir, I just want to, you said about 20% of the customers have so far availed the moratorium. So in the next phase of moratorium, do you see the number going up? Is it too early for you to give any projections, or you can help us around that? Because I'm not seeing that moratorium as a concept has really hit the ground with a lot of borrowers. It has some people are hesitant that, why pile on to more interest cost and things like that. What is your reaction to it?
That's a very sensible thing, right? On day one, when moratorium was announced by RBI on 27 March, I had in my conversations indicated, pay if you can. So, if people are able to pay, they should pay. If they are unable to pay, then they should take the benefit of the moratorium.
So for SBI, only 20% of your overall customers are facing some cash flow problem. Is it safe to assume so, sir?
They may not be facing exactly the cash flow, but they decided to avail the moratorium. Many of them, in fact, some of them in the corporate, they could have serviced their loan, but I think as a matter of strategy, they also want to preserve their cash. And it does not necessarily mean that the people who have opted for the moratorium, they all have a difficulty in servicing, but at times as a matter of strategy, people want to preserve their cash and therefore are availing the moratorium.
Okay. So group limits increasing to 30%.
Hamsini, please. Hamsini.
Just one last question, Ritesh, please.
Yeah. Okay.
Group limit going up to 30%. Do you see larger groups with good rating come to banks for demand of loan? Because they've also had a reasonable amount of success in TLTRO and things like that.
Yeah, but this was a demand which was made by RBI based on discussions with many large groups, and particularly the government-owned entities where some of the mergers happened. And as a result of that merger, the large exposure framework, they were proving to be inadequate. And at this point of time where more money needs to flow into investment, look, this is again a very welcome and a very pragmatic step taken by me.
Thank you very much, sir.
Can I have the next question from Ankur, please?
Yeah. Hello, sir.
Yeah.
So first, I wanted to take a clarification from you, sir. If a retail customer wants to avail moratorium from 1st of March, is it still possible, or they have to do it from 1st June only?
That I will have to, I think, work out a clarification, because I'm not sure, because if you have paid till May, that is the presumption you are saying, and June, July, August, you want a moratorium. Then I presume that you will take moratorium from June.
Okay, sir. Sir, one more thing I wanted to understand. For retail customers, again, interest component has to be paid on whenever this moratorium is ending?
No. If it is a EMI or a term loan,
yes,
it is a moratorium on principal plus interest. If it is some business or even an individual, if they have overdraft, not overdraft, but individuals or retail, I don't foresee a situation where they will be having a working capital. Working capital loan is for businesses. So that interest up to 31st August, 1st March to 31st August, they would need to pay before March 21.
So whatever the accumulated interest is there for 6 months.
Yeah, that will have to be paid in 6 months starting from 1st September.
Okay.
Can we take the next question from Anand Adhikari from Business Today?
Yeah, good morning, sir.
Good morning.
So this 3 lakh crore, the guarantee, on this MSME loan is coming from the CGT SME. What has been the bank's experience in, dealing with CGT SME and in terms of, settling claims and all?
It has been, we have no complaints.
Okay.
Can we have the next question from Beena Parmar?
Hi, sir. I want to ask what exactly is the resolution mechanism given the measures announced today, and also that IBC filing of cases under IBC has been suspended for a year. How will resolution be impacted?
Resolution is that the resolution framework of Reserve Bank of India of 7th June, that is still valid and it remains.
Is that enough?
Now, in today's circumstances, there is all the more reason for the banks that if any client comes for a restructuring or a resolution, that should be done within a 6 months.
But sir, is that enough? Is it helping? Because June 7th hasn't really worked as much for companies and banks as such.
No, it has. Why do you say so? Many cases, rectifications, many cases the restructuring has been implemented. Some cases it could not be implemented within that 6 months period which ended on 7th January. But number of cases where it could not be concluded within 7th January, the number of cases is not very.
Will it be difficult for resolutions now?
No, why would it be difficult? It will be like the guidelines remain the same as of now. The difficulty means that sustainable debt may come down because of the change in the market conditions and the situation which is currently prevailing. But still, the concept of sustainable, unsustainable debt, rating, all that remains.
Can we have the next question from Radhika?
Final question.
So one more after that, that's it. So 2 more questions. Radhika, can you hear us?
Yes, I can. Good afternoon, sir. Hope you're keeping safe. Thank you for taking my question. Just 2 questions I had. One was on the moratorium itself. Will there be operational challenges because a person who has taken the moratorium until June and he probably doesn't want to take the next 3 months moratorium? Will there be some complication there?
No, there is no complication. There is no complication because what we did as a bank, we extended the moratorium across the bank.
Right.
But there are many accounts where standing instructions are there or a flash mandate is there. And for this extension again, only those mandates we will have to check from the borrower that what do they want.
Okay. The last question, sir, I just wanted to squeeze in on the repo rate cut itself. How do you see this impacting your lending rates? And deposit rates have already been, cut substantially by all banks. So do you see further scope for reduction in your deposit rates to safeguard your margins?
This we will decide in our ALCO meeting. We do a very holistic review of the various components of our assets and liabilities. And based on that, we would decide on the deposit rates and there's a mechanism for deciding the MCLR, which will happen in the first week of June. From 1st July, all the loans which are linked to external benchmark, they will automatically be reduced by 40 basis points, starting 1st July.
Yes. Okay. Can I squeeze in a last question, Ritesh? Just wanted to understand your view on the NPA situation, given what you're looking at right now, based on the proportion of loans of yours that are under moratorium and the extension and the defermency, all of this put together. And as you mentioned, yes, sir.
We will have a better idea in the next quarter. Because this quarter mostly has been around lockdown and how much impact it will have and at what pace or how quickly the businesses can recover. So we will have a better idea only going in the next quarter.